Tube Investments of India Limited, TII, the hidden empire behind India's best-kept stock secret. In the last 6 months, this stock fell nearly 30% from its peak. That is 20,500 crore rupees of market cap wiped out. But here is what most retail investors do not know. The company behind this chart manages an 85,000 crore rupees empire, controls a semiconductor plant, is building India's future EV ecosystem, and has compounded wealth at 27% per year for the last 5 years. This is Tube Investments of India. And in the next 8 minutes, I'm going to break down exactly why this correction might be the best thing that happened to long-term investors, or a value trap. Let us find out. So first, what exactly is Tube Investments of India? Most people think it is just a bicycle company. They are completely wrong. TII is part of the Murugappa Group, one of India's largest and most respected conglomerates. 29 businesses. 10 listed companies. A combined net worth of over 85,000 crore rupees. The group is over 125 years old. Within this empire, TII sits at the top as a listed holding cum operating company. It makes engineering components, steel tubes, bicycle chains, door frames, but more importantly, it holds a controlling 58% stake in CG Power, one of India's fastest growing industrial and consumer electronics businesses. Now let us talk numbers, because the numbers are genuinely impressive. On a standalone basis, TII's revenue crossed 7,893 crore rupees in FY25, and net profit jumped 76% year-on-year to 1,297 crore rupees. That is not a typo. 76% profit growth. When you consolidate CG Power and their other subsidiaries, total revenue hits 19,465 crore rupees. The group is firing on all cylinders. Now, the valuation. APE of 70 times earnings is not cheap. This stock is priced for perfection. And that is exactly why it fell 31%. The market got nervous about whether TII can sustain this level of growth. But here is the thing, when you look at the 5-year CAGR of nearly 27%, you start to understand why investors still pay a premium. The question is, does that premium remain justified going forward? Here is what makes TII structurally different from most mid-caps you will analyze. It is the Murugappa Group backing. This group has zero history of promoter pledging. No governance scandals. No related party controversy. They are one of the cleanest business families in India, which is why institutions like LIC and foreign FIIs hold TII even at its premium valuation. And when you look at what sits inside the TII universe, Cholamandalam Investment and Finance, Coromandel International, Eid Parry, CG Power, you realize this is not one company. This is a diversified financial ecosystem. Here is a stat that blew my mind. Cholamandalam Finance, connected to TII through the broader group, has grown its loan book at over 30% CAGR. That kind of group DNA shows up in how TII itself is run. But the reason I am genuinely excited about TII for the next 3 to 5 years has nothing to do with their bicycle division. It is these 3 bets. The EV play through TI Clean Mobility is particularly interesting. Management has publicly targeted $1 billion in revenue from this division within 4 to 5 years. That would represent a near 4x jump from current levels. And then there is CG Power's semiconductor ambition. India's government is pushing hard for domestic chip manufacturing, and CG Power is right in the middle of that story. The OSAT plant in Sanand is a 7,500 crore rupees bet on India becoming a global semiconductor hub. Now I would be doing you a disservice if I did not talk about the risks. Because there are real ones. PE of 70x is expensive if growth decelerates. EV division currently loss-making. Profitability timeline unclear. Rail wagon order, 1,200 crore rupees, delayed. Q4 FY26 expected. CG Power semiconductor, high capex, 3 to 5 year gestation period. Broader market slowdown could compress premium further. 1 year return, 5.35%, underperforming the index. The honest answer is, TII is not for someone looking for a quick 3-month trade. It is for someone who believes in a 3 to 5 year compounding story, backed by one of India's most trustworthy conglomerates. So, should you buy TII at 2,422 rupees? Here is my framework. If you are a long-term investor with a 3+ year horizon, and you believe in India's EV transition, India's semiconductor ambition, and the enduring quality of the Murugappa Group, then this 31% correction has brought TII into a zone where the risk-reward is genuinely favorable. The analyst consensus target is 3,175 rupees. That is 29% upside from here. If TII's new businesses start showing results over the next 12 to 18 months, that target could actually turn out to be conservative. However, and I want to be very clear, if you are expecting a quick turnaround in the next 2 to 3 months, this is not the stock for you. The EV losses, the delayed railway order, and the semiconductor gestation period mean short-term volatility is very likely to continue. If you found this breakdown useful, hit the like button, it genuinely helps this channel grow. And if you want me to do a deep dive on CG Power, or compare TII with Schaeffler India and Timken India, drop it in the comments and I will make that video next. New videos on quality Indian stocks. Subscribe so you do not miss the next one. See you in the next video.